Trading hour. Let's get a conversation on where the markets could really be headed from here on. We have Varun Locha from HDFC Securities to join us now. They've actually put out a very interesting report on, some sector stocks which seem attractive for the upcoming year. So, Varun, we want to get straight to that because, there has already been quite a significant rally and valuations have, of course, run up quite a bit. In that context, what pockets do you think are still positioned to, offer value if you're to get into them right now?
Yeah, hi, good morning. You're right. Overall, I think the recent move since October lows, of around 10 to 12%, have already captured a fair bit of upside, which we were expecting in the next calendar year. However, having said that, if I look at, fresh sectoral allocation, we believe some of the large cap sectors like banks and IT incrementally can do better in next calendar year. Even if FPI flows were to remain slightly better than what they were in CY23. These are the only two large sectors which can absorb FII flows, and valuations are also fairly supportive in these two sectors. We are seeing pockets of overvaluation in a lot of other sectors, but these two look good from a tactical perspective for next 6 to 9 months. And among the other themes where we have been positive on for quite some time, which is infrastructure, manufacturing, real estate, power, while we still continue to like them on a 2 3 year view, we believe near term they need to take a breather and consolidate. So next 6 months, they may not give you the kind of returns they have given in the previous 6 months, but from a 2 3 year perspective, we are still positive on those themes.
I'm just picking up one of the things that you've written in your note. Retail and HNI have put bids worth 44.5 lakh crore in 2023, which compares with 2.6 lakh crore in all the IPOs combined of 2022. Any signs of euphoria? Is this data point something that should worry you, or should it just be taken positively and it shows domestic demand which can continue to drive up prices?
Actually, it's a bit of both. One, it shows, the fact, I think it shows the fact that Indian retail investor money, the pool is sizable enough now. And, depending on the attractiveness of the issues, there is enough domestic liquidity available to sail them through. So we are no longer that much reliant on FPI flows, for any IPOs or overall market. But at the same time, I think the kind of, there is a bit of euphoria for sure in the second half of this calendar year. We are seeing in the way number of IPOs are coming and the way they are getting subscribed. And I think it's bound to happen in a year where mid and small cap indices have given you 50% kind of return. If you go back in the history and see those kind of years, they are always marked with very high IPO activity as well. And, typically the subsequent years are not as strong. So CY24, we would be slightly more cautious now on mid and small caps. We were fairly positive right through the year, not overly worried, but now I think we are starting to see signs where next year won't be as easy for mid and small caps, and that applies for both secondary and primary market. So I'll be very surprised if, we see a similar size of issuances and similar sort of subscription by HNIs and retail next year.
Oh, absolutely. That is the view that we've been getting quite a lot, that maybe, now is the time to increase allocation to large caps and get a little bit cautious on what's going on with the broader markets. Varun, you were mentioning some sectors that, look good right now. Is there anything that you feel like, you've taken profits in, you feel like a bulk of the up move is done? You did mention the mid and small caps. So any pockets within that?
We have been taking some money off the table in the themes which we have liked actually. So we have taken some money off the table in power, given how strong the run-up has been in some of these stocks, and now they are no longer, I would say, in value zone. We had bought them when they were in value zone. Now we believe they are fairly valued. Similarly, infrastructure and cap goods, which was and the overall capex theme, which we were very positive on right through the year, we have taken some money off out there, both in large cap and mid cap out there. Even real estate, which, as I said, we are still positive on a 2 3 year basis, but the run up in some of the stocks have been very hard. So we have taken some money off there, and we have incrementally put that money into banks, IT, and oil and gas. So these are the three sectors where we've gained, which are essentially the large cap sectors. We have also taken some money off the capital market plays, exchanges, which have again run up very hard. So yeah, it's sort of rotation into slightly more, defensive sectors or sectors where risk reward is slightly more attractive going into 2024.
Varun, if you could give us the HDFC Securities view on two stocks. One is DOM, stellar listing, 1,400 rupees share price versus issue price of 790, the stationery maker. And the other one is Varun Beverages and its South African acquisition. Any thoughts on these two?
Unfortunately, don't cover either of them, so won't be able to give up things to you. But I think both of them are operating in spaces which are fairly attractive, and both of them are sort of market leaders. So that's, I think, the good part about it. But obviously, one has to evaluate them on a bottom-up basis. We don't have a coverage, so won't be able to give a precise view.
And Devyani International, is that something that you look at? Fundamentally, QSRs have been struggling, and now Devyani yesterday announced the Thailand acquisition, KFC branches.
Yeah, so Devyani we cover. We currently have a reduced rating out there, more due to valuations and the fact that overall QSR sector demand doesn't look as strong. On the acquisition per se, I think it's a reasonably good acquisition. If you see the pattern, both of these acquisitions, be it Devyani or Varun Beverages, they are in international markets, and they are at a much lower valuation than what these stocks trade at in India. Now, market is getting overly excited on the difference in PE, but that's the sort of valuations that these businesses get in those parts of the world. Having said that, the management team is strong. If they're able to add value to the business out there, like KFC, Thailand franchise is very strong. The way we understand it, it's the best QSR format out there. KFC we have seen in India in the downturn has done very well. So it's an interesting acquisition, but won't get overly excited right at the beginning and give it a similar valuation like India, the way market is giving in the short term.
Got it. Thank you very much for joining in. We'll slip into a very short break. We'll come back with more.